So first and foremost is thank you for the opportunity. There are two sets of banks that were there in pre-pandemic. One set of banks is the conventional banks or traditional banks which had their plans of digitizing or transformation of digital journey, which was planned for 5 to 10 years kind of a horizon. And they were taking it very lightly in terms of the approach. And there was other set of banks which were started up as a neo and a challenger banks, which started offering from day one digital services, either online or mobile. But the services was limited to either digital deposits or digital savings. But what pandemic has changed for these two sets of banks, the first and foremost for the conventional and the traditional banks, they had to move their transformation journey from anywhere between 3 to 5 years to less than 1 year kind of a situation, but at scale. Secondly, the neo banks and the challenger banks, what we witnessed is that they couldn't restrict themselves to offering only digital deposits and digital savings. The customers started asking and demanding the full scale service of banking operations being offered to them, whether it's to do with the overdrafts or current accounts, a credit card, or insurance or mutual funds and things like that. So these two challenges for the global banks, one is in terms of the traditional banks looking at transforming digitally at scale, and the neo banks which are expected to now become full service banks by providing all the services. That has contributed to world over globally for vendors like us to look at offering the financial services to them in a digital, remote and virtual way. See, if you now look at in terms of the Asia Pacific region, always they have been one step ahead when it comes to in terms of digital adoption. So starting from, if you now look at the telecom, we never had the manual or the analog mode of telecommunication. We just jumped to digital. So the mobile adoption is so high here, and almost all the countries have more than 1.1 ratio in terms of the mobile penetration. So if there is one person, they will have on an average 2 mobile phones. So those are the kind of things we saw. And because the Asia Pacific banks have already built the platform in terms of their core transformation, whether it's in India or in Singapore or in Hong Kong or in Vietnam or Philippines. So it was easier for these banks to now look at delivering more and more financial services to their end customers. And that's how they are looking at a partner who can provide them that kind of a capability. Having the base set, you should be able to now look at delivering the financial services on top of it and integrate very well with the ecosystem. The other thing what has also happened is most of these Asia Pacific banks are looking at leveraging the fintechs and as well as the startup community so that they should be able to now look at externalizing the innovation, and they should be able to now offer more and more services to their customers, which comes as a package kind of an offering. So that required them to have a very robust and as well as an open API enabled solutions. So, and that's why Finacle came into picture for them to help them out. Absolutely, a very, very valid question. And I think now more and more industries, not just the banking, more and more industries have realized moving towards an SaaS or a PaaS or an infrastructure as a service kind of a business. And specifically for a banking industry, the pandemic has given them very insightful lessons so that they should be now concentrating on their core competency. Just to give an example, we have seen many of the banks which have gone ahead and invested on infrastructures and data centers to manage their applications and their IT infrastructure. During the pandemic, they have realized that it is not their core competency because of the lockdown and as well as improved expectations from the customers on the digital services being delivered. So people could not visit the data centers. They were not able to now manage infrastructure sitting outside the data center. And you already had an advanced and matured way of providing these services on cloud. So that is where we have seen more and more banks are now looking at offloading all these data center services to a cloud service provider. And there are many hyperscalers who are able to now take care of the security, take care of the safety, and as well as provide you an uptime, which is going up to 99.999%. So so you don't have a downtime, and you will also be assured of the latest and the greatest security infrastructure being implemented there, because globally many of the entities are not just the banks, many of the entities are using these hyperscalers capabilities, and we have seen banking taking up to these kind of challenges, and they are moving towards a lot more SaaS and as well as PaaS, that is platform as a service, infrastructure as a service, and software as a service kind of a journey. And in banking, we have witnessed in last 12 months that they are slowly moving all their peripheral solutions, which is in terms of their HR systems, payroll systems, accounts payables, account receivables, and all of them are getting moved into the SaaS platforms. And it is only a matter of time where their core processing engines are also going to be moving into the SaaS platforms. One of the industry which gets hit is the small medium enterprise all over the world, and not many know that these SMEs contribute to more than 60% of the global GDP. Even in the US, out of the $15 trillion, almost 60% is contributed by the SMEs businesses, and they also contribute to more than 50% of the global employment. And almost more than 90% of all the global businesses are actually SMEs. So once the financial crisis hits, and this is the segment which is going to take the biggest hit, and this is not just in COVID, even previous financial crises, the similar situation. And what most of the governments will do, or the regulators will do, is to make sure that they actually support and provide subsidies, help them in terms of financially to come up to the way they were in the pre-crisis level, so that the employment improves, the GDP improves, and the contribution to the national income improves. And that is what is being disbursed through the banks. So if you have observed, whether it is India or UK or US, all of these countries announced massive packages to bail out the SMEs, and all of these subsidies and the financial supports actually came to through the bank. And this is where vendors like us will have an opportunity to help banks in terms of evaluating and helping them in terms of onboarding at a scale, and providing them the capabilities of the products like overdrafts or loans, or supporting them in trade finance transactions. And all of that is a core competency of Finacle. And this is where we have seen the opportunity like COVID or the previous financial crises have brought in opportunities for us. Finacle started its journey on blockchain way back in 2016 and 2017. And at that particular point in time, we were working on the distributed ledger technology, which was backed by the blockchain technology. But as the experimentation continued and we started rolling out our applications, whether it's Finacle Payment Connect as a solution or a Finacle Trade Connect as a solution, we saw that there is a lot more need for us to now look at making Finacle as independent as possible when it comes to working on the distributed ledger technology which is underlying. And that's when we started experimenting beyond the blockchain. We ported our applications on Hyperledger. We worked with Ethereum, and we also worked with Corda R3, so that we are able to now make it our application as a DLT agnostic. And that is where it helped us to now look at a partner who can provide us that kind of a support. And that is when we partnered with R3 Corda, so that our application is working not just on blockchain, but it can work on R3 Corda as well. And that is a partnership. With that partnership, we also went ahead and tested our application and solutions with a lot more use cases with the global banks. So we had included participants from more than 20 countries, and many of the banks from these 20 countries participated in testing it out, the use cases, and these use cases were spread across, not just limited to a letter of guarantee, a letter of credit. They were also looking at doing the open account transactions and making sure that the export finance and import finance transactions and the entire supply chain, the life cycle being carried out. And we processed more than 400 to 500 such use cases, and it has helped all these banks and as well as us to make sure that we are ready for the market. And of course, during the pandemic, as I rightly mentioned earlier, if you now look at in terms of more and more transactions going into digital, there is a risk of the cyber security coming into picture. And this is where blockchain plays another role where you should be able to process all your transactions on a blockchain, which works on a consensus mode and also provides an immutability, so that the bank should be able to now help their customers safeguard their identity, their data, and maintain the confidentiality and help them maintain their privacy as well. If you now look at in terms of last 2 to 3 years horizon, I'm including the pandemic time frame as well. There are a lot of development have happened globally across many industries. So I'll come to the banking industry specific development and the changes that are going to take place in our own opinion. First and foremost, if you now look at the Standard and Poor, the S&P 500 companies globally, almost 9 out of the top 10 most valued companies, they are the platform companies. Similarly, if you now look at the global unicorns, the unicorns are the companies which have been valued at more than $1 billion. And almost 60% of these global unicorn companies are platform companies. And where we come from, if you now look at in Asia, almost more than 80% of the Asian unicorn companies are platform companies. And specifically in India, if you now look at, almost 75% of the Indian unicorn companies, whether it is to do with the education technology or in terms of the food delivery or in terms of the financial services, they're all platform companies. So there is a message. Every industry wants to get into platform companies and they want to move out of the pipeline business. And banking has been a laggard in that. And now we see in last 2 to 3 years, banks have realized that the business model has to be reimagined and they need to be now moving towards platform companies. That means they need to provide a marketplace. They need to create a network effect. They need to be now looking at bringing the service providers and the service seekers outside the financial services also into their network. And this is where we see the banking is moving forward from a pipeline business to platform business. And we have seen some 2 or 3 leaders in this journey already. And that is where Finacle is poised to get the benefit because, as I mentioned in the beginning, Finacle has been created to support this kind of platform businesses and which is layered approach of implementation. And with a progressive modernization capability, Finacle helps these global banks to look at moving away from a pipeline business, creating that financial services marketplace, bringing in the APIs that are expected to be exposed to the external world, externalizing the innovation, and working very closely with the ecosystem of the fintechs and the startups and the regtechs and the big techs so that they become part and parcel of this platform. And that is what we see as a biggest trend that is picking up going forward in the banking industry. If you now look at in terms of the technology and as well as the domain has changed over a period of time. What used to be called as a core banking 20 years back has completely changed the definition today if you now look at. So earlier the core banking definition used to be a deposit processing system or a loan processing system. That's it. But today if you now look at a core banking solution that is expected to now cater to many other aspects of a banking transaction, whether it is in terms of the customer onboarding, the customer relationship management, and the origination part. More importantly, embedded analytics are part and parcel of the core banking. Plus, you have the anti-money laundering, asset liability management, and many of the things are all becoming part and parcel of the core banking definition, including some of the elements of artificial intelligence, machine learning, and deep learning also becomes part and parcel of the core banking definition, depending on which region and which segment of the bank you're talking to. So, over a period of time, the challenge for Finacle has been to make sure that we are always ahead of this technology curve. So even before many of the vendors were looking at the browser-based internet technologies, Finacle was a pioneer in that.